3 lessons from the collapse of FTX. All right, what's happening, YouTube? We're talking about crypto today. It's going to be awesome. We're doing 3 lessons from the collapse of FTX, so sit tight. Lesson number 1 is all about understanding the range of probabilities based on volatilities. Let's look at the range of volatilities of different asset classes. This chart's showing the annualized standard deviation or volatility of all the various asset classes. So you can see, to put things in perspective, US stocks are really volatile, but things like emerging market stocks, venture capital, and especially Bitcoin and crypto are crazy volatile. I always liked the way that Howard Marks talked about risk as a range of probabilities. Here's the same chart of asset classes overlaid with Marx's chart of risk versus return and the range of probabilities. You can see that things like venture capital and Bitcoin or crypto are just enormously risky with the potential of enormous returns. It's cliche in financial circles, but it's true. The only free lunch is diversification. Lesson number 2 is first principles are always better than political narratives. It's so hard to be objective with your money, but nothing will be more toxic than political biases. There are useful narratives in the cryptocurrency space, but you also have to be careful navigating the emotional and politically charged minefield that is many of the narratives. I would encourage you to step back and try to take a first principles perspective, understanding the financial system for what it is rather than what you may want it to be. I've done a ton of work trying to understand the financial system using a first principles perspective, but I'll also provide a ton of links down below to help you out. Lesson number 3 is you've got to put your emotions in check. The financial markets can best be thought of as this series of ups and downs that are going to constantly test your emotions. Downturns, ironically, are great learning periods because they teach you just what your max pain point is and how much diversification you really need in your portfolio. The key to putting your emotions in check isn't just understanding your risk profile, but it's also creating a portfolio that looks in a lot of ways like a robot that removes your emotions from the game to begin with. The big takeaway from lesson number 3 is that your portfolio management process over time has got to become a rules-based and systematic set of processes. Thanks for watching, everybody. If you like these videos, please like, subscribe, or leave me a comment about a video you'd like to see in the future.